The tax man cometh. The tax burden is worse than we think. This week, the week of April 14th, 2024, the average American will have two significant milestones to mark on the calendar, and for the average American, neither milestone is a cause for celebration. The first is Monday, April 15th, which is the filing deadline for federal and state income taxes, and it's also the day to commemorate the procrastinators of the country who scramble to file their taxes on the last day, and those taxpayers who must pay and are holding onto their money for as long as possible. The other milestone this week is on Thursday, April 18th, which is Tax Freedom Day for the average American. That means that the average American will work the first 108 days of this year just to pay their federal, state, local income taxes and Social Security taxes. What needs to also be remembered outside these dates, it does not reflect the full extent of the tax burden put upon the American taxpayers. The first income tax in the United States was enacted during the Civil War in 1862 and lasted for 10 years when it was repealed in 1872, though some Civil War taxes remained until 1881. The 16th Amendment of the U.S. Constitution was ratified on February 3, 1913, and formally gave Congress the authority to impose a federal income tax. The states were to follow shortly after the federal government enacted an income tax of their own. Most of the current income and Social Security laws in force today were created in the 1920s and 1930s and is what is called a progressive income tax, meaning that the more taxable income a person makes, the higher their tax percentage rate increases. The use of a progressive income tax instead of a flat percentage rate is argued that it adds fairness to society. Those who are fortunate to make more income should pay more, not only in absolute terms, but in relative terms. This appears to be a fair standard that most Americans support, though as one moves up the income brackets, the support does decrease. The disadvantage of the progressive income tax is that it is likely subjected to changes by politically connected to lobby to have the tax rules amended by Congress to favor themselves, or is used by politicians to use the tax law to favor some chosen constituencies and punish other constituencies. The other issue is that the tax laws that are imposed on U.S. taxpayers change every year and are difficult to keep up with, or onerous laws that can mask the practice of tax avoidance or not paying taxes altogether. The amount of regulation increase, the likelihood of tax avoidance, both intentional and unintentional, will increase as well. The amount of time spent in the U.S. to keep up with the tax code is estimated to be 6.6 billion labor hours expended on record-keeping, tax law compliance review, filing required forms and schedules, and making the required submissions to the Internal Revenue Service, or IRS. This is the equivalent of $260 billion of labor spent just to comply with the federal tax code as of 2021. This is $260 billion spent that does not actually produce anything, but is needed just to comply with the tax laws. The IRS was created to keep up with the myriad of tax laws, and the use of the Chevron deference to write rules and enforce laws, that is through law enforcement, but more significantly, tax code is enforced through tax audits. The IRS is also a tool for politicians. The IRS reports to the executive branch of the federal government and has been used in various administrations to use their audit functions to intimidate or punish perceived political enemies. Also, despite the claims under the current administration that only high-earning tax cheats will be audited, the reality is that 15 out of every 1,000 tax-paying households are audited, and of those 15, 12.7 are lower-income households. This is because it takes less effort for the IRS to achieve enforcement collection goals against taxpayers who do not have the resources to hire accountants and tax lawyers. The other issues of the progressive income tax is that it creates a disproportionate distribution of taxes paid. In 2023, the top 50% of taxpayers paid 97.7% of all federal income tax, and the bottom 50% of taxpayers paid 2.3% of taxes. The U.S. is getting close to the tipping point that 50% of the electorate do not pay any income tax, which makes it theoretically possible, though not likely, that 50.1% who do not pay taxes will be dictating to the other 49.9% of taxpayers of how much they must pay in their income. This is not to say that the well-off taxpayers are hurting. They use their influence and resources to leverage or lobby politicians for loopholes or exemptions in the tax code. And with so many rules in the gray area of tax code, much of their income becomes classified as non-taxable to cut their effective tax rates. As stated above, it will take 108 days for the average American to work just to pay their tax bill for the year. But even that is understated. Once federal, state, and local income taxes, Social Security, Medicare, and property taxes are paid, that only accounts for 80% of all taxes paid by taxpayers in America. Other taxes that taxpayers are charged are not seen, such as state sales taxes, federal and state gas taxes, and other taxes paid for various services. Below is a list, not exhaustive, of the type of taxes that are collected. In 2023, the federal government receipts for taxes was about $5 trillion. Individual income tax was $2.3 trillion. Social Security, $1 trillion. Social Security disability, $173.9 billion. Unemployment insurance, $55.3 billion. Corporate income tax, $546 billion. Medicare tax, $408.9 billion. Other taxes made up $887.3 billion, which were miscellaneous receipts of $39.4 billion, railroad retirement, $6 billion, transportation trust fund, $41.9 billion. Then there was customs, duties, and fees of $101.7 billion. Excise taxes was $86.5 billion, which made up other excise taxes of $11.6, tobacco taxes of $11.6 billion, alcohol taxes, $10.3 billion, gas taxes, $53.1 billion. And then there was estate and gift taxes, which is another $20.9 billion from the federal government. In addition, the states collected another $1.3 trillion in additional taxes, including income, excise, sales, and property taxes. The ugly truth is that many of these other taxes are passed on and appear to be invisible to the average person, but the expense is usually passed on to the consumer, who is usually a taxpayer. For example, alcohol or tobacco has a tax that is added to the price of the good to increase the purchase price. And to add insult to injury, the excise tax is part of the valuation applied to the sales tax calculation. Gas is another product that is highly taxed but has those taxes baked into the final price of the gallon, and consumers are unaware of how much the cost per gallon is actually taxes. Another example is corporate income tax. Politicians often scapegoat corporations as greedy entities that do not pay their fair share. It is true that the average corporation is easy to dislike because they are a faceless entity. However, the folly of the corporate income tax is that it is baked into the cost structure of the corporation and is an expense to them. Corporations are in the business of creating shareholder value, so they simply do not absorb the federal corporate tax but distribute it into the form of higher prices of goods and services, or provide lower wages, lower employment, or reduction in share buybacks. If the corporations were forced by law to absorb the tax without passing it on, it would come out in the corporate profits, which would reduce shareholder value and stock price, or it might force the corporation out of business. Corporate income tax is also a high burden on lower and middle class taxpayers. They spend a higher percent of their income in goods and services and less on investment. So they pay the tax burden that's passed on to the customer. Also, most corporate workers fall into the middle class, and the corporate income tax means that these workers make less, or fewer of them are hired by the corporation. Also, middle-class workers' retirement accounts, like IRAs and 401ks, are heavily invested in corporate stock. So tax burdens can be shifted, creating a reduction in profit margins or a reduction in stock buybacks. As a note, stock buybacks create upward pressure on the stock value, which reduce the investment value of stocks and thus reduce the value of these retirement accounts. This also impacts upper income earners investments as well. The result is that corporate tax is a burden that disproportionately falls on the middle and lower class income taxpayers. So, taxes are a necessary evil to have a functioning society. The federal, state, and local governments have important services to provide their citizens, and it needs resources to perform these services, and these resources are provided by taxes, and to a much lesser extent, fees. However, the attempt to create a fair system of taxes has become a maze of regulation and a gauntlet of taxes with the intent of the government to separate a taxpayer from their earnings. When a government has a tax system that it can be amended to create rules to find more ways to take from others and give to others, not necessarily to give to other Americans. So how free is a country when the apparent primary purpose of a contributing taxpayer is not to live as a free citizen, but is to labor to pay Peter?